Now on to U.S. earnings. JP Morgan Chase and Citibank are due to report second quarter results later today. And analysts will be looking for balance sheet strength after the failures of several smaller lenders earlier this year. Let's bring in Thomas Hayes from Great Hill Capital, who joins us live. Thank you so much for joining us on the program. Firstly, can I just ask you what you're expecting in terms of those earnings from those banking giants?
Well, right now, the estimates for bank earnings are plus 7% revenue growth, which is actually the highest of all 11 sectors in the S&P 500. I do think, though, we're going to see some guide downs on net interest income because of the higher for longer interest rate environment that we're in moving forward. However, I also think that that's been priced in. These stocks have been derated. If you look 3 years ago, they were trading on average at 12 times PE. Now they're trading at 8 times PE. So there is a lot of bad news already priced in. And as we know, Mariko, the secret to happiness is low expectations. And I do think the expectations are pretty low tomorrow, and they may just be able to beat.
That's very interesting to hear. At the same time, there have been some worries about the banking sector after the collapse of some smaller lenders. Do you expect some of those big lenders' exposure to those smaller lenders when they report their results?
Well, Mariko, it's a rear view mirror story. So even if they do take some type of impairments, it's going to be a one-off, it's going to be a backward looking, and the market will be able to look through that. What they're going to be interested in is net interest income. And in the case of the big banks, the capital markets reopening and deal flow reopening, it was completely shut down last year in Q2 and Q3. We may see some improvement in Q2, and we'll really start to see some improvement in Q3 as capital markets come back.
So, of course, interest rates is something that everyone is watching. What are the other challenges facing the sector, in your view?
Well, I think that we want to see loan growth. I think there's some concern over commercial real estate, which in some areas may be overblown, in some areas may be underappreciated. I think what you're going to see as far as it relates to commercial real estate is those A-type properties are going to do very well through this. The B and C properties are going to do less well, and the banks may take some hits on that front. It will be very similar to what we saw with the mall crisis a few years ago.
We've run out of time, but thank you so much for joining us on the program this morning. Now to time.